Did you know that drivers over 70 could be overpaying for their car insurance by hundreds, sometimes even thousands, of dollars every single year? It's a shocking truth, but many seniors are unknowingly paying way more than they should. Today, we're going to pull back the curtain on the auto insurance industry. I'll explain exactly why this happens, expose the 5 biggest mistakes that are costing you a fortune, and reveal 5 secret discounts that insurance companies don't always advertise. Plus, our lines give you a side-by-side comparison of the top companies to help you find the absolute best deal. Stick around, because by the end of this video, Uline have all the tools you need to slash your insurance bill and keep that money right where it belongs, in your pocket. So, why do insurance premiums often creep up as we get older? It's a question many seniors ask. Insurance companies operate on risk assessment. They use massive amounts of data to predict the likelihood of a claim. Unfortunately, statistics show that as drivers enter their late 70s and 80s, the frequency and severity of accidents can increase. This isn't a personal judgment on your driving skills. It's a cold, hard calculation based on broad trends. Factors like potential changes in vision, hearing, or reaction time are all modeled into their pricing. Another reason is that older drivers may be less likely to shop around for new quotes, showing a loyalty that, ironically, can be penalized. Insurers know that long-time customers often don't check competitor rates, so they gradually increase premiums over time, a practice sometimes called price optimization. It feels unfair, and it often is. But understanding these reasons is the first step to fighting back and finding the savings you deserve. Now, let's get into the common pitfalls that are making this problem even worse. The first and most costly mistake is what I call set it and forget it. You bought your policy years ago. It auto-renews every 6 months, and you barely glance at the bill. The second mistake is overlooking your coverage needs. Many drivers continue to pay for comprehensive and collision coverage on an older vehicle that simply isn't worth much anymore. A good rule of thumb is this: if your car's value is less than 10 times the premium you pay for that coverage, it might be time to drop it. For example, if you're repaying for $100 a year for collision on a car that is only worth $2,000, it might not be financially wise. You could end up paying more in premiums over a few years than the car is even worth. Take a few minutes to look up your car's current market value on a site like Kelley Blue Book. Then, look at your policy declaration page and see how much you're paying for comprehensive and collision. Do the math. You might be shocked at how much you can save by adjusting this one thing. Mistake number 3 is failing to report major life changes. The most significant one for seniors is retirement. When you stop commuting to work every day, your annual mileage plummets. This drastically reduces your risk in the eyes of an insurer. Did you tell your insurance company when you retired? If not, you're likely being charged as if you're still a daily commuter. Other changes matter too. Did you recently move? Your zip code has a huge impact on your rate. Did you get married or, sadly, become widowed? Your marital status also affects your premium. Even installing a new security system in your car can lead to a discount. The key is to be proactive. Anytime a significant life event happens, your first thought should be, how does this affect my insurance? A quick phone call could save you a surprising amount of money. The fourth mistake is ignoring your liability limits. Many people choose the state minimum for liability coverage to get the lowest possible price. This is one of the most dangerous financial mistakes you can make. State minimums are often incredibly low. For example, a state might only require $25,000 in property damage liability. What happens if you cause an accident that totals a $60,000 luxury car? And the fifth common mistake is not asking for discounts. Insurance companies have a whole menu of discounts available, but they don't always apply them automatically. You have to ask. They assume if you don't ask, you don't know they exist. From bundling your home and auto policies to having a clean driving record, there are numerous ways to save. Many seniors simply aren't aware of the specific discounts tailored to them, which leads us perfectly into our next section. We're about to uncover those little-known discounts that can make a huge difference. Alright, now for the good stuff. 5 powerful discounts that can dramatically lower your auto insurance costs. First up is the defensive driving course discount. The second secret discount is for low mileage. We touched on this, but it deserves its own spot. If you're retired and driving less than, say, 7,500 miles a year, you qualify for a low mileage discount with most carriers. Some companies are even rolling out pay-per-mile or telematics programs, where a small device or a smartphone app tracks your actual driving habits. If you're a safe, infrequent driver, these usage-based insurance programs can offer massive savings compared to a traditional policy. Don't pay for miles you aren't driving. Be honest about your reduced mileage and ask about telematics options. Third, let's talk about affinity and loyalty discounts. Are you a member of any organizations like AARP, a university alumni association, a professional group, or even a credit union? Many of these groups have negotiated special discount rates with insurance carriers for their members. These are often called affinity group discounts. It costs you nothing to be part of the group, but it could save you a bundle on your insurance. Similarly, while loyalty can sometimes be penalized, some companies do offer a genuine loyalty discount if you've been with them for many years without any claims. It never hurts to ask, do I qualify for any affinity or loyalty discounts based on my memberships or my history with you? The fourth discount is all about your vehicle. Having safety features like anti-lock brakes, airbags, and daytime running lights usually gets you a small discount. But did you know that having an anti-theft device, like a car alarm or a tracking system, can also lower your comprehensive premium? Another factor is the type of car you drive. Insuring a modest, safe sedan is far cheaper than insuring a high-powered sports car or a massive SUV that is expensive to repair. When it's time to buy a new car, consider its insurance cost rating before you make a final decision. A practical choice can lead to years of lower premiums. Finally, the fifth and often biggest discount is the bundle. Insuring your home or apartment with the same company that insures your car can unlock a multi-policy discount that often ranges from 10 to 25%. This is one of the easiest and most significant ways to save. If your home insurance is with one company and your auto with another, you are almost certainly leaving money on the table. Get a quote from both of your current insurers to see what they charge for a bundled package. Then, take those quotes and shop them around with other companies to see if you can get an even better deal. The savings from bundling alone can often be hundreds of dollars per year. Now that you're armed with these discount strategies, which company should you approach? Let's break down some of the top contenders for senior drivers. It's important to remember that the best company is different for everyone, as rates depend heavily on your personal profile and location. However, some companies consistently stand out. First, let's look at The Hartford. They have an exclusive partnership with AARP, offering special rates and benefits for AARP members. This often makes them one of the most competitive options for drivers over 50. They also offer unique coverages like Recover Care, which helps pay for things like cooking, cleaning, and transportation if you're injured in a car accident. This kind of benefit can be incredibly valuable. Next is Geico. Known for their competitive pricing across the board, Geico also offers specific discounts that benefit seniors. They have a prime-time contract for drivers over 50 in many states and a retirement discount if you're no longer working. Their easy-to-use website also makes getting a quote and managing your policy very straightforward, which is a big plus. Then there's State Farm. As one of the largest insurers, they have a vast network of local agents. For those who prefer a personal, face-to-face relationship with their insurance provider, this is a huge advantage. State Farm offers numerous discounts, including for completing a defensive driving course and for having no accidents in the past 3 years. Their customer service is also frequently rated very highly. We also have to mention Progressive. They are excellent for comparison shopping. Their tool allows you to see their rate right next to the rates of their competitors, which is incredibly transparent. Progressive has a great snapshot telematics program that can lead to big savings for safe, low-mileage drivers. If you're confident in your safe driving habits, this could be a fantastic option. Lastly, consider Amico. While maybe not as well known, Amico consistently ranks at the very top for customer satisfaction and claims handling. They are a mutual company, meaning they are owned by their policyholders, and they often pay dividends back to their customers. If top-tier service and a hassle-free claims process are your priority, Amico is definitely worth getting a quote from, even if their base rate is slightly higher. The ultimate takeaway here is that you must shop around. Don't just get one quote, get at least 3 to 5. Use the knowledge you've gained today. Go to these companies' websites or call their agents and specifically ask for the mature driver discount, the low mileage discount, affinity discounts, and a bundled quote. By comparing offers and leveraging these discounts, you put the power back in your hands. We've covered a lot today, from why your rates go up to the costly mistakes to avoid and the powerful discounts you can use to fight back. You now have a complete playbook for lowering your auto insurance bill. The single most important action you can take is to never stop shopping around. Make it a habit to review your policy and get new quotes at least once a year. I hope this guide has empowered you to take control of your car insurance costs. If you found this information valuable, please hit that subscribe button and turn on notifications. We're rededicated to bringing you more financial tips and tricks to help you save money and live a more secure life. Thanks for watching, and drive safely.